Hey, welcome back. Today, we're going to do something super practical. We're going to break down how you actually compare two real companies side by side. We'll be using real numbers to see what they really tell us. All right, let's get into it.
So, picture this. You've got two companies, both in the exact same industry. On the surface, they might look almost identical, right? Well, for our case study, we're looking at American Resources Corp, that's ticker AREC, and Hycroft Mining Holding Corp, ticker HYMC. The big question is, how do we figure out what's really going on with each one? Let's find out.
All right, first things first. We're going to start with the big picture stuff, the balance sheet. You can think of this as a company's financial X-ray. Seriously, it tells us everything about their overall size, what they own, and maybe more importantly, what they owe. This is where we build our foundation for understanding the scale and, the basic health of each company.
Okay, let's throw out a big number. $142.16 million. That's the market capitalization for Hycroft Mining. It's basically the total value of all its shares out on the market. But, a number that big is kind of meaningless without some context, right?
And here is that context. See? Hycroft, over there on the left, is pretty clearly the bigger company by market value when you put it next to American Resources. So you could say round one, just in terms of pure size, definitely goes to Hycroft. But, as we're about to see, size isn't everything, not by a long shot.
And yeah, this is where the plot thickens. This chart is awesome because it shows what each company owns, their assets, right next to what they owe, their liabilities. Now sure, Hycroft has more assets, but just look at that liabilities bar. It is way bigger. So what does that tell us? It tells us that even though it's the bigger company, it's also carrying a much, much heavier load of debt. That huge debt load brings up another really important question. Who actually has skin in the game? I mean, how much of the company is owned by the people running the show versus, well, everyone else?
So, before we jump into the numbers, let's quickly define this key term, closely held shares. All this means is the shares that are owned by insiders. Think executives, board members, basically the people who know the company inside and out. A high percentage here is a huge deal. It can be a powerful signal that leadership is super confident about where the company is headed.
Now, check this out for American Resources. We're seeing that insiders hold just over 32% of all the shares. I mean, that's a pretty significant chunk, right? It suggests that the interests of the management team and the interests of the shareholders are really well aligned. Okay, now let's flip over and compare that to Hycroft Mining. Here, the closely held shares are a little bit lower, sitting at around 29%. Now, that's still a decent amount for sure. But when you're doing a direct head-to-head comparison like we are, well, American Resources has a slight edge on this particular metric of insider confidence. Okay, so we've looked at the big company-wide picture. Now let's zoom in. Let's start looking at things from your perspective as an individual investor. Breaking things down into these per-share numbers can make all those huge figures feel a lot more real and way easier to compare. And wow, when you put these numbers side by side, you can see a really stark contrast. Take cash per share. American Resources has more. But then look at total debt per share. The story completely flips, and Hycroft's is way higher. You can already see the picture forming, can't you? One company has more cash on hand, and the other one has a whole lot more debt. And that brings us down to the last row, EBITDA per share. Now, that's just a fancy acronym for a company's core operational profitability. And for Hycroft, that number is negative. This right here is a huge red flag. It's a critical signal that at its very core, the business isn't actually making a profit from its main operations right now. So, we've looked at size, we've looked at debt, we've checked out who owns the company, and we've drilled down to the per-share performance. I think it's time to bring it all home for our final scorecard. Let's pull all these different pieces together and put them into one clear head-to-head summary. So here it is, the final trade-off. In one corner, you've got American Resources. It's smaller, yeah, but it comes with lower debt, more cash per share, and you've got that stronger insider ownership. And in the other corner, you have Hycroft Mining. It's the bigger company, no doubt, with a higher market cap and more assets, but all that size comes with a price, higher debt, and, as we saw, negative core profitability. So what's the better bet? The bigger company that's loaded with more debt, or the smaller one that's sitting on more cash? See, that's the question this whole analysis leaves you with. Because the numbers, they don't just pick a winner for you. What they do is paint a picture. They tell a story. And now, you know exactly how to read it.